So hi and welcome to the Data Explorer's market update in Forum Week. So we're going to talk about airlines today because on the back of the ash cloud situation, the snow shutting Heathrow, and now with the Libyan disaster and oil being so expensive, we've got reasons to suspect some potential pressure in the business models of these airlines because after all, according to Morgan Stanley, 40% of their operational costs goes towards fuel costs. And they also reckon, Morgan Stanley, that in Europe, airlines have hedged 60% of their fuel costs this year, whereas in the US it's about 35% hedged. So, I mean, people will disagree on that, but either way, most airlines are nowhere near fully hedged and therefore neutral to oil being this expensive. So let's first of all look at Lufthansa, so Europe's second biggest airline. Short interest is low actually. People had gone short, but actually the shares have held steady. And then they've started to fall, and the shorts have covered rather too early, so a bit of a misread on Lufthansa. Air France-KLM, actually short interest has gone from 1.6% to 4.3%, so a massive increase going on there, and the shares have been trading downwards. Air France-KLM seems to be the main one. We're seeing the negative sentiment in Europe at the moment. Across the pond, American Airlines. Okay, interestingly, AMR, which is the parent company, they introduced a price increase this year, might have even been a bit earlier, but actually no other airline followed suit, making them look rather exposed as the most expensive airline, as well as the world's favourite airline, I suppose, although that's BA's tagline on American Airlines is. So they had to pull their price increase, and the short sellers might be thinking what's going on here, and the short interest has doubled. It's now 9%, which is pretty large. United Continental, their short interest has gone from 9% to 12%, which is very, very high again, and that is a recent movement, so another sort of bit of negative momentum. Apparently, to offset high oil prices, they are going to be withdrawing fuel inefficient planes. Good news for those of you in the back sitting in old planes, fed up with the lack of investment in new planes. That isn't probably going to make that much difference, and short interest remains very high. As a footnote, it must be said that there are convertible bonds in some of these airlines, like those two American ones I mentioned, which could mean the short selling is kind of residually quite high. But either way, the direction just recently is for more short selling in the airlines I have just covered. If you'd like to read the report in more detail, it is at dataexplorers.com/news.